All right. So now we can start. I think majority of the students is already joined, and I already told you I will complete the refund. No worries. I will complete the refund with the customs as well because refund also contains a lot of provision of export. So tomorrow we will be discussing import, export, customs, and refund. So there will be no worry, Harshal. Okay. Today we will cover first place of supply, and then for the purpose of MCQs, ITC is very important. So we will cover that as well. Now, first of all, we have to start with IGST. And in this act, there is a very interesting, very important topic, and the name of the topic is called place of supply, POS. So it is from basically section 6 to section number 13 of IGST Act. Yes. Now we have shifted from CGST Act to IGST Act. Now these are the provisions of IGST Act. Okay, please sir also provide the charts for due date of returns and forms under GST. Okay, I will also do that. Actually, returns are in your syllabus or not? Because I was not told to teach returns. I was told to teach all these topics. So you are asking for due dates for knowledge purpose. Okay, I will share with you all the due dates for knowledge purpose. Okay, no problem. So first of all, we are talking about the place of supply, and when we are talking about the place of supply, there are few sections of IGST that starts from section number 6 to section number 13. So first of all, section 6 is the charging section, similar to section number 9 of CGST Act. So now we have to cover section 7, 8, 9, 10, 11, 12, 13. And first we have to go for section 7. That talks about, sir, what is interstate supply, because in general sense we are saying when the goods are going from one state to another state, or where there are two states involved, then we are saying that it's an interstate supply. But what is the exact meaning of interstate supply? So now listen carefully. This is the definition of interstate supply, and what this definition says: when location of supplier means where the supply located and the place of supply are in two different states, means LOS and POS, location of supplier, from where the goods are supplied, location of supplier, and the place of supply. If both are in same state, then I can say it is local supply, it's an intra-state supply. And if both are in different state, then I can say it's an interstate supply. So in this case, LOS and POS are in different state. This makes it an interstate supply. This is the first thumb rule. Second, import. I have already told you that import and export is always treated as interstate supply. So location is in India, place of supply outside India means export. So import and export both are interstate supply. Even when I am supplying to SEZ zone, because it is also considered as deemed export. And when supplies to SEZ is also considered as deemed export. So deemed export will also be treated as interstate supply. And there is one more interesting fact. This is very important. They can ask you this in MCQ, that if any supply which is not intrastate will automatically become interstate. Yes, if something is not intrastate, then automatically it will become interstate supply. So if the MCQ says that this is the supply is not following the provision of intrastate supply, tell me what tax will be levied. So we will always automatically assume that it's an interstate supply. So if something is not intra, then automatically it will be interstate. There is one more thing which is covered in interstate supply, supply to foreign tourist. Because it is more like an export. You are supplying goods to a tourist who will be taking it outside India. So in that case, that will also be covered as interstate, because it's more like an export. So interstate transaction, what are the inclusion? What are interstate supply? You have to repeat with me. First of all, when is the interstate supply? The very important rule is, when is the interstate supply? When LOS, or LOS means location of supplier, and the place of supply is different state. That's why we are discussing place of supply, because for being an interstate supply, we have to know what is the location of the supplier and what is the place of supply. If both are in different state, then it's an interstate supply. If both are in same state, then it's an intrastate supply. So here both are in different state. If both are in different state, then it will be treated as interstate supply. Second, supply of goods or services imported into import. Third one is export, where location of supplier is in India and place of supply is outside India, that is export. Says we are supplying to says, it is also a deemed export. And finally, if something is not intra, automatically it will become interstate supply. So this is the definition of interstate supply. Tell me, are you getting it? What are the inclusions in the definition of interstate supply? Now, what is intra? Intra is very simple. When location of supplier and place of supply is in same state, then it is intra, and all the supplies which are not covered in the definition of intra will be covered in the definition of inter. So there is nothing to discuss in intra. So section 7 is very important because section 7 indicates when a supply will become interstate supply. So if it is import, then it is inter, export, inter, deemed export, inter. If it is LOR and POS is in LOS and POS is in different state, then also inter. And if I am supplying to the foreign tourist, then also it is interstate supply. And if it both are in same state, LOS or POS, location of supplier and place of supply is in same state, and if sub supply is not intra, then automatically it will become interstate supply. So are you able to understand what is interstate supply and what is intrastate supply? Is it clear to everyone? Yes. Moving towards the next point, that is about section number 9. Section 9 talks about, sir, you are saying that location of supply and place of supply should be in different state, then it will become inter. Yes. Sir, what if I am not supplying in any state, I am supplying in waters? I am supplying in territorial waters to a vessel. Now my location is Mumbai, but I am supplying in waters, not at any state, not on land. I am supplying goods in the waters. Now, sir, whether it will be inter or intra, but it is an Indian territorial water, so it cannot be export, Manoj. Manoj, export will only if it is goods are going outside India, but I am supplying to a vessel which is in India. It is in territorial water of India. It is within the 12 nautical miles boundary. Now the question arises is, if I am supplying in India, but that supply cannot be import and export because it is not going outside India, what is the place of supply or location of supply? Important. No, this is not the clause like interstate or intra. What is clearly written, if I am supplying to a vessel, then the nearest state, the nearest state from nearest baseline from that water, where is the vessel situated where I am supplying the goods, where is the oil rig situated where I am supplying the goods, from that place what is the nearest baseline, that will be the place of supply. So if I am supplying goods from Maharashtra and goods are going to the vessel in waters, in territorial waters, then where is the nearest state from that water? That place will be the place of supply, or that place will be the location of supplier. This is given in section number 9. Look at the provision. What it says, when the location of supplier or the place of supply is in territorial water, then it is deemed to be. What word is used? Deemed to be. In the coastal state or the UTs, where is the nearest point or appropriate baseline is located. So from that place, we have to look at the nearest point. Wherever is the nearest point, that is the place of supply. Is it clear to everyone? Yes or no? Yes, great. So this is about section 9. So section 7 talks about interstate. Section 8 talks about intrastate. Section 9 says if I am supplying in the water, then the nearest location, what? I can't hear you. Can you write down in the chat box? Please, can you write down in the chat box? Okay. So this is about section number 9. Okay, kindly repeat. Okay. Section 9 says that if I am supplying to the territorial water in India, so it cannot be import and export because I am supplying in any vessel which is in territorial water in India. So the nearest baseline from that vessel, nearest location from that vessel will be the state where I am supplying the goods. It will be deemed that state which is nearest from that vessel. So that is the place will be treated as place of supply or location whenever I am supplying goods in the waters, okay, we have to look at the nearest baseline from that water. That is the place of supply. That will be treated as the consumer state. Okay, get it? Got it? Section number 9, clear. Now, we have section 10, 11, 12 and 13 that actually talks about the place of supply. 10, 11, 12 and 13. Look at the screen. 10 and 11 is basically for goods. 12 and 13 is for services. Again, 10 is for domestic sale of goods. 11 is for import and export. 12 is when supplier and recipient both are in India. 13 is one of them is outside India. It means, first of all, our place of supply provisions are mainly covered in 4 sections, 10, 11, 12, 13. 10 talks about the domestic sale of goods, 11 talks about the import and export goods. 12 talks about the domestic sale of services. 13 talks about the cross-border supply of services. Means when there is an import and export involved of services, then there is 13. If the buyer and seller both are in India, then section 12. Okay, that is for services. For goods, it will be 10 and 11. So we have total 4 sections to discuss in the place of supply, 10, 11, 12 and 13. First of all, I can say place of supply of goods is very easy. Place of supply of goods is not that difficult. But before starting place of supply of goods, we have to discuss what is the meaning of location of supplier and location of recipient. Very simple. The definition of both are same. What is the location of supplier? Where the place of business, the registration is obtained. So the registered place of the business is the location of the supplier. But for example, if he is not selling from his main place of business, he is selling some goods from his branches, then that fixed establishment from where he is supplying the goods, that will be the place of supply. And if he doesn't have any place of supply left, then the place of residence of the supplier can be treated as the place of location of the supplier. So the person who is selling the goods, where is he located? First look at where is registered place of business. If he is registered in Madhya Pradesh and is supplying goods through his registered place of business, that place will be place of location of supplier. Sir, but he has registered place, for example, in Mumbai, but he has one warehouse in Nagpur. He is supplying from that warehouse. Then that fixed establishment from where he is supplying the goods, that place is location of supplier. And if he doesn't have any registered place of business, he doesn't have any other place of business, then his usual place of residence can be the location of supplier. So where the person exists depends on his business place or his residence. Registered place of business, his branches or his residence, depend whatever is available from where he is supplying. If he is supplying from registered place, then that registered place of business is the place of supply. If he is supplying from any other branch, then that branch is the location of supplier. And if no other information is available, then usual place of residence can be the location of supplier or location of the receiver. Okay, now what section 10 exactly says? Now this is very important. First of all, section 10 says about the place of supply for goods. So we have to understand what will be the place of supply for goods. Very simple. Whether the goods involve the movement, means whether I am dispatching the goods. If the goods are going through transport, okay, let's take an example. I need answer from all of you guys. What do you think about this transaction? Okay, I received an order in Indore and I have to dispatch the goods to Udaipur, Rajasthan. Tell me what is the place of supply. I'm in Indore and I'm dispatching to the goods to Rajasthan, Udaipur. What is the place of supply? What do you think? Destination of goods. Actually, yes. Whenever the goods are moving from one place to another place, whenever the goods involve the movement of the goods, always look at the destination where the delivery terminates. So if the delivery terminates in Rajasthan, the place of supply should be Rajasthan. So I am located in Madhya Pradesh and I am sending the goods to Rajasthan. So location of supplier is Madhya Pradesh and the place of supply is Rajasthan. So it's an interstate transaction and I will charge IGST. Are you getting it? So yeah, whenever the goods involve movement, I am transporting the goods, I am delivering the goods to some place, then where is the destination of the goods? That will be the place of supply. But there is one interesting case, and that is regarding Build to ship model. Build to ship model. You know what is the meaning of build to ship model? Somebody knows about what is the meaning of build to ship model? Build to ship model. Okay, means the location of the person who is ordering the goods is different and the delivery address is different. Yeah, I am getting an order that I have to send some goods. I am getting that order from Mumbai, but I have to deliver that goods in Gujarat. Then my billing address will be Mumbai and my delivery address will be Gujarat. My buyer is in Mumbai, but he wants to deliver goods in Gujarat. Then I can say my billing is different, my shipping is different. It is called bill to ship model. My question is, in this case, I am in MP. I am billing in the name of the person who is in Maharashtra and I am dispatching the goods to Gujarat. What do you think? What should be the place of supply? What should be the place of supply? I need an answer from you guys. It should be Maharashtra or Gujarat? Where the delivery of goods? Wrong. Now you are wrong. Now you are wrong. No. In case of build to ship model, yes, this is very important. Look at the example. There is a buyer from MP, Madhya Pradesh. He ordered a goods from a supplier who is in Maharashtra, but he wants goods to be delivered in Maharashtra only. So the place of supply will not be the delivery address. Delivery address is Maharashtra. No, this is not the place of supply because billing will be in the name of the person who is in Madhya Pradesh. So the tax that they will be charging in the invoice will not be CGST, SGST. They will be charging IGST because the Maharashtra supplier is billing in the name of MP buyer. So even when the delivery is in Maharashtra, it doesn't matter because in build to ship model, the matter is who is ordering. The person who is ordering, he is the receiver. So the place of the receiver is important here, not the place of the delivery. So this is the case on build to ship model. Listen very carefully. When the goods are delivered by the supplier to the recipient at the instruction of the third person, this is the third person. Okay. The place of supply is the place of business of such third person, not the actual recipient. So here, this is the person who is ordering the goods to be delivered to the Maharashtra. What will be the place of supply? Madhya Pradesh, not Maharashtra. It will not be a local supply. It will be an interstate supply and IGST will be charged in this case. Got it? Yes? So this is different from the basic model. Sir, GST is a destination based tax, but in this model the same is defeated. Why so? Actually, if this is a local supply, if we consider it is a local supply, then the credit chain will break. You know why? Because the person will charge CGST and SGST Maharashtra, and the person who is want to claim the credit is in Madhya Pradesh. So he cannot claim credit of CGST and SGST Maharashtra because he is not registered in Maharashtra, he is registered in Madhya Pradesh. So the credit chain will break. So to pass on the credit from the Maharashtra person to MP person, IGST is required, and that will be possible only and only when the bill contains IGST. So to pass on the credit from the Maharashtra supplier to the MP buyer, IGST invoice is required, and that's why it will be treated as interstate transaction, not intrastate transaction. Okay, very nice. Next is again interesting. When the supply involve installation, I do not only have to sell the goods, my duty is also to install at a particular site. Tell me what should be the place of supply in this case. What do you think? Of course, location of installation, because there is where the goods will ultimately consumed. So the location of installation is the place where there is a place of supply where the goods are actually installed. That is the place of supply. Next one is when the supply does not involve movement of goods. When I don't have to deliver, means the customer will buy from my shop. Then what is the place of supply? If a customer came to me and buy jeans from my location, what is the place of supply? Actually, now this is local, because I have to deliver the goods here only. Where he is taking the goods, it doesn't matter to me now. I have to deliver the goods at my shop only. So of course it will always be intrastate transaction. So if the goods does not involve movement of goods, then it is always be intrastate transaction, and I will always be charging CGST and SGST, because my delivery terminates at my shop only. So actually that is a problem, but there is no explanation to this problem even right now. Like if the person is registered in any other state, but basically he took the delivery in the same state, and then he is transporting the goods on his own. Now the problem is whether he will charge CGST or SGST or IGST. From the point of view of supplier, how could supplier know that the goods will be moving through the another state? Supplier will never able to find out that the goods will be moving to another state. So from the point of view of actually, I got it. You are asking that the person will furnish his GST number, so that will explain to him that it's an interstate transaction, but it is not possible, na? Because we are not focusing on the GST number or the recipient location. In case of goods, our main focus is where the goods are going. So if the goods are in the same location where you are selling the goods, the principle says you should charge CGST, SGST. But now the problem is the next person cannot pass on the credit. The next person cannot claim the credit because he belongs to another state. So maybe in that case, what he can do is, what practically they does is, they charge GST according to the GST number. They actually does it that the supplier look at the GST number of the buyer, and if the buyer belongs to another state, they will automatically charge IGST. But as per the exact law, what it says is, if it does not involve the movement of goods, how could you find out where the goods are going? So maybe on the basis of this principle, that the GST number of the buyer is from another state, we can assume that it's an interstate transaction and the destination of goods will be another state. But it is of a question mark right now, because department may raise a question that how could you know that the goods will be going in another state? Normally supplier does like that, but it is not 100% accurate transaction. He requests to make bill in his GST number. That is what I am saying, that the buyer will request that please make a GST bill of IGST, because I will be taking the goods outside the state. So that is how they will do it, but it's not foolproof. During audit, department may ask a question that how could you find out that the goods are actually, because there is no e-way bill in your documents. You don't have the e-way bill to show that I have delivered the goods in another state. What you can do is, you can ask a e-way bill from the buyer. If he is ready to give the e-way bill, like he will be transporting the goods, then it is okay, you can charge interstate, you can charge IGST. Okay? Nice. Next case is case number 5. When the goods are supplied on board on conveyance, like in Indigo flight, many times when we are going in the Indigo flight, air hostess just marketed a lot of goods that we are selling power bank, we are selling pillows, we are selling this and that in the flight. So for example, there is a rich guy, he just bought a pillow on board in the flight only. Now the question arises is, what is the place of supply? Because now the flight is airborne. Exactly where the transaction happened, nobody knows. Where the delivery happened, nobody knows, because the flight was airborne. So the question arises is, what will be the place of supply? In this case, the place of supply is where the goods are loaded on this conveyance. If the flight started from Delhi, and from Delhi the goods were loaded on the conveyance, and now the flights are going to the Mumbai, Delhi is the place of supply. Where the goods loaded becomes the place of supply. Yeah, so if the goods are sold on board in conveyance, when the conveyance is airborne, where the goods are loaded on that conveyance, that is the place, that is place of supply. Is it okay to everyone? Are you able to understand this provision? So in section number 10, we have 5 different scenarios. If it is involved movement, then we have to look at the delivery location. In case of build to ship model, always look at the location of the third person. If the goods involve installation, then the installation. If supply does not involve movement of goods, then of course where I am delivering basically my local supply. And finally, when the goods supplied on board on conveyance, then where the goods are exactly loaded on the conveyance, that will be the place of supply. Piyush is asking, what if a person is in Haryana, give direction to the Rajasthan person to install the goods in Rajasthan? Now, there is ambiguity that this is a case 2 or 3. So now this is a bill to ship model. Piyush, this will be a bill to ship model, and we will be billing in the name of the person who is in Haryana. Yes, Haryana. If he belongs to Haryana, then billing address is Haryana, installation is address is somewhere, then I will be charging GST as the place of supply will be Haryana, not the installation. In 2 and 3, we will go for 2. Okay, nice. Next, section 11 is, yeah, billing address is important. We have to look at the billing address to charge GST. Yes, billing address is important. Yes. Section. Again, can you pardon? I can't hear you. Yeah, of course, of course, of course. It will be mentioned. Reason is, in invoice you have to write down both addresses. You have to write down the billing address as well as you have to write down the delivery address. So then it will be treated. And if both are different, then it's a bill to ship model. And also in e-way bill, there are two options. One, you have to write down the billing address, and when you are preparing e-way bill, you have to write down both the address, billing address and shipping address. So that will automatically makes it a bill to ship model. Okay, nice. Now we can go for section interstate supply. Again, I have told you that if the buyer is furnishing GST number and that GST number belongs to another state, then of course it will be interstate. We will be assuming that if the person is belongs to another state, he will be transporting goods to another state. But if it is B2, it can what? No, it's not a bill to ship model because no. There is no delivery now. There is no delivery. So how can you say it's a bill to ship model? Yeah. Yeah, got it. That you are saying that he is taking the delivery here, but his billing address is in another state, so he will be charging IGST. That is what I am saying. That if he is furnishing the GST number, if it's a B2B supply, and the next person is furnishing his GST from another state, then we will charge IGST. But if it's a B2C supply, means the consumer is buying goods and he is taking the delivery from the shop only, then we will always assume it's a local supply. We'll always treat it as an intra-state supply. Okay, so if buyer is furnishing the GST number, then we will go for interstate. That we were discussing now. We were discussing it in our earlier discussion as well. Okay, now if we are talking about section 11, it's very simple. When it will be import and when it will be export. Simple. If the place of supply is in India and goods are coming from abroad, then it is import. And when goods are going outside India and place of supply is outside India, it export. Simple. Place of supply is India means goods are consumed in India from abroad, then it is import. And when the goods are going outside India, then of course it is export. So in section 11, we doesn't have to look at anything because they are basically explaining the same thing that we have discussed in interstate transaction definition as well. If the place of supply is in India, goods are coming out from outside India, it's import. If the goods are going outside India and place of supply is outside India, it will be export. It is nothing that we have to discuss in section 11. The main section that we have to discuss is section 12 and 13. This is very important. So now we have to go for section number 12. This is very important. Listen. Section 12 apply when place of supply and the location of supply and recipient is in India. Means it is about the domestic services. When the supply is in domestic zone, there is no cross-border transaction, neither the receiver or supply is outside India, then we will be going for section number 12. And if one of them is outside India, then we will be going for section number 13. Sir, how it is identifiable in case of foreigners that the place of supply is not the local place but the outside India? Yeah, actually the foreigner will give us the declaration that I will be transporting that goods from India to abroad. I am getting the goods for taking it to the abroad. If that is the case, then I will go for interstate. Otherwise, I will treat it as a local supply. Okay, because there is a provision that if a tourist is taking the goods outside India, then he can claim the IGST refund. Yeah. So if tourist is taking any goods outside India from India and he paid the IGST, he can get the IGST refund under this IGST Act. So that's why they are asking the supplier to charge IGST, so that when he will be leaving India, he can claim the refund of that IGST from the airport. Okay. Now, section number 12. Section 12 says domestic supply of services, and this is very important, general rule. The basic principle of place of supply in case of services, like in goods, the basic principle was where the delivery terminates, where the goods are going. But in services, we cannot look at the location of the services because we don't know where the services are actually consumed. So what the general rule says, in case of B2B transaction, register to register transaction, the place of supply should be location of receiver. Always the preference is the location of receiver. Because GST is a destination based tax, it means location of receiver is the place where the services are actually consumed. So we will always prefer location of receiver. But if in B2C we don't know the location of receiver, then we will go for location of supplier. Like I don't know it is a B2C model, so I don't know the address of the receiver. So I will treat that the delivery or the services are consumed here only, and they will charge it as a local supply. But it is only when I don't have the address of the receiver, I don't know the exact location of the receiver. So B2B, location of receiver. B2C, I will prefer location of receiver, but if location of receiver is not available, then only I am allowed to choose the location of the supplier. So this is the general rule that we have to follow in place of supply. Consumption is where the location of receiver is. Where is the location of receiver? That is where the services are actually consumed. So the thumb rule is we will always prefer location of receiver. So B2B, B2C, we will always prefer the location of receiver. But in B2C, if location of receiver is not available, then I can go for location of supplier as well. Now, there are some cases where I have to choose something different. This is very interesting. When the services is relating to immovable property, like hotel, marriage garden, construction, real estate agent, interior architect, renting of immovable property, where the immovable property is the main component. Now the place of supply will not be the location of receiver or location of supplier. Simple, the place of supply is where the location of immovable property or where they are intended to be. Like I booked a hotel in Rajasthan, so the place of supply will be Rajasthan only because the hotel is situated in Rajasthan. So if I am consuming the services in Rajasthan, the place of supply will be Rajasthan only. So if in case I am booking an hotel in Rajasthan, the place of supply will be the location of hotel only. And they will always charge CGST and SGST there. Yeah. So important thing is, if the services is relating to immovable property, the location of the immovable property is the place where we have to decide the place of the supply. Only one exception here. If the immovable property is outside India, like I am an architect or interior designer, I am hired by a company in India, but the hotel they are constructing is in Dubai. So I am in India, they are in India, the transaction is in India, but the property is outside India. Now I cannot look at it like it's an export. I cannot say that location of property is outside India, so it's an export, place of supply will be outside India. If the hotel or the property is outside India, then I will switch over to general rule. Yeah, this is very important. First, if I am taking any services, I am giving any services which is relating to immovable property, I will be choosing location of property as place of supply. However, if my property is not in India, then I will go for general rule and I will choose location of recipient as the place of supply. I will follow general rule if my property is outside India. If my property is in India, then my property is the location, that is the place of supply. Always the location, there is the place of supply. This is regarding the services relating to immovable property. Nice. Moving towards the next case. I have also attached the example. So now you have to read these examples at your home, because we don't have that much time that I can recite all the examples here as well. But for your convenience, I have also attached a lot of example to understand this concept. आर्किटेक्ट सर्विसेज इंडिया में ही देगा, क्योंकि जो कंपनी उससे होटल बनवा रही है वो इंडिया में ही है. So recipient and supplier both are in India. So it's not an import and export transaction. It is not an import and export transaction. तो भी import export transaction नहीं है because place of supply is in India ना. If the place of supply is in India and supplier is also in India, then it's not an import and export. What the definition of an import and export says that the location of place of supply should be outside India. Now, as per this rule, if the hotel is outside India, my place of supply will be the location of receiver. That is in India only. So, of course, my place of supply is in India, then it cannot be treated as receiver. So receiver is in India na, so we have to assume that it is a local supply. It will not be treated as import and export. It will be domestic supply only. Okay, nice. Next one is in case of services of training. Services of training, we are training is provided to Nepal agency in Rajasthan hotel. Actually, training is different. Training is not covered in immovable property. First, we will cover this transaction. Okay, training is not covered in immovable. For training, I have a different point. The services is restaurant, catering, personal grooming, fitness, beauty and health treatment. Very simple. All these services are very personal in nature. They are actually consumed where they are actually provided. So the location is always where the services are performed. Here there is no exception, no general rule, nothing, because these services are very personal in nature. This services required the presence of the receiver. So where the services are provided, there only it is consumed, and that's for where the services are actually performed. That is the place of supplier for restaurant, catering, personal grooming, fitness, health and health services. Okay. Next, now comes the training. Training and performance services, like training services. For B2B, general rule will apply, that location of receiver. But for B2C, rather than going for location of receiver, here I will choose services where it is actually performed. So Jatin was asking me about the training services. Now here the training services will be covered. So I am providing any kind of training services. B2B, general rule will apply, but for B2C, training where actually training is held, where the training is actually performed, that will be the place of supply. It is for training. Next, services by way of admission to the event. Again, I am buying a ticket for a concert. Of course, where the concert is happening, because it is again a personal nature of services. My service will be consumed where the concert is there, where I am for which event I am buying the ticket. So that event is the place where I have to take the place of supply, because again it's more a personal nature of services. So in that case, services are actually consumed where it is provided. Yeah. So in this case, services by way of admission to event. Avish is asking a very nice question. Sir, you are also a registered person. Yeah, I am registered under GST Act. I see MAI is also registered. Yeah. So now if I am providing training services, whether you will charge CGST, SGST or IGST. Of course, I will charge IGST. You know why? Because location of receiver. I am located in MP, Madhya Pradesh. I am from Indore. I see MAI is located in Kolkata. So now it's a place of supply is interstate transaction. So when I will be sending the invoice, I will be charging IGST in this particular case. Get it? Got it? Very nice. Moving towards the next case. Admission to event, where the event is actually happened. That is the place we have to choose. Again, it's a personal nature of services. So where the event is actually happened. Now, event organizing services. This is very interesting. It is not entry ticket of the event. I am talking about the event organizer who are providing the services to the hotel, or who are providing the services to the company who is basically doing that event. So a person is providing a services of event organizing. Again, B2B, general rule will apply. B2C, location of event. But if the event is outside India, again general rule will apply. So if the hotel was outside India, general rule applied. If the event is outside India, general rule will apply. When the general rule will not apply, only when it is a B2C transaction and event is in India. In that case, location of event that we have to choose. So B2B, general rule. Event is outside India, always general rule. If event is in India and it's B2C transaction, then I will be going for location of the event. So you have to remember this, that B2B, location of recipient, general rule. B2C, Event is in India, then event is outside India, then again general rule. It is for event organizing services. Next one is transportation of goods. Again B2B, general rule will apply. B2C, if the transportation is domestic in nature, then where the goods are handed over. And if the transportation is outside India, then the destination of goods. So now the principle is completely different. B2B, general rule is applying, but we have to remember for transportation of goods, B2C. If the transportation is within India, like domestic transportation, where the goods originated, where the goods are handed over to the transportation, like I am handing over a parcel to the courier agency in Mumbai, so Mumbai will be place of supply. But if the parcel is going outside India, it's a abroad parcel, then the destination will be the place of supply. So if a courier agency is transporting a parcel and that parcel is going abroad, then it will be treated as export because destination is outside India. So it will be treated as place of supply will be outside India. It will be treated as export. But sir, if the destination is in India, then we don't have to look at the destination of goods. We have to look where the goods are handed over to the person. So if the goods are handed over at Mumbai, so Mumbai will be the place of supply. This is again very interesting. Okay. I have attached a lot of examples. You just have to read all these examples to make this concept more clear. Now what about passenger transport services? This is again very interesting. In case of passenger transport services like train, airline tickets and everything, B2B, LOR, again general rule, B2B, location of recipient. But what about B2C, sir? In case of B2C, the location will be the location where the passenger is embarking from his journey. Embarking means वो कहाँ पे चढ़ रहा है, where he is boarding for his journey. If he started his flight from Mumbai, then the place of supply will be Mumbai. If he started his flight from Delhi, then the place of supply will be Delhi. So where he is embarking for his journey, that will be the place of supply for B2C transaction. You can look at a very interesting thing that even in these special circumstances, most of the cases general rule is applying for B2B. The different rule is applying only for B2C. We can see that even in case of training, it was general rule B2B, B2C where the training is held. Event organizing, general rule B2B, B2C where the event is held. Even in case of transport, B2B, general rule B2C, destination or goods are handed over. Depends where the goods are going. Passenger transport services, again B2B, general rule, B2C where the passenger is embarking. You have to remember this, that mostly general rule is applying even in the special cases. Next one is again right to book tickets for the future. Yeah, this is interesting because we don't know where the passenger will be embarking because I didn't buy the ticket. I bought a right to buy tickets later. There was an offer from Indigo that you can buy 10 tickets in a year later if you are paying 50,000 right now. So I didn't get the ticket, I get the right to buy ticket. So right now I don't know where the passenger will be embarking, where he will be going. So I will be choosing general rule in this case as well. So if I booked a ticket and I am an unregistered person, the place of supply will be where I am embarking, from where I am boarding the plane. But if I bought a right to buy ticket in the future, general rule will always apply. That is location of receiver, B2B, B2C, then location of receiver. If available, not, then location of supplier. Got it? This is interesting. This is new. Right to book ticket is a new point. It is a recent clarification that if you are buying right to book ticket, then we have to go for general rule. It will not be covered in the above rule. Nice. There is one more interesting case. I am not buying goods. I am buying services on a conveyance. Like if I bought a power bank on a conveyance, I told you in section 10 that where the power bank was loaded on the conveyance, that is the place of supply. But now I am getting the services. Like I bought a spa services on a plane. Yeah, there are some aircraft which are also providing the services of spa on the plane. I bought some services. I bought internet on the plane. So what is the place of supply if I am buying any services airborne. Yeah, this is the first scheduled departure of that flight from where the flight started its journey. Like there was a flight which started from Mumbai, then that flight will be going to Delhi, and from there that flight will be going to Srinagar. So then in that case, Mumbai will be the place of supply always, whether it is B2B, B2C, anything. In this case, Mumbai is the place of supply always, because the first scheduled departure of that flight is from Mumbai. So Mumbai is the place of supply. Got it? Very nice. Next is telecommunication. This is again very interesting. If it's a fixed line connection, like you bought a broadband connection, there is a tower, there is a router, internet router, there is a tower, there is some wiring, then the location of the device installed is the place of supply, because there where the device is installed, where the router is installed, where the set-top box is installed, that is the place where the services are consumed. So location of the device. If it's a postpaid mobile connection, then the billing address, because billing address is the place where the receiver is actually consuming the services, so billing address. But if it's a prepaid mobile connection and you are buying recharges, so now the point is whether I bought a scratch card. Like few times now everybody is doing the online recharge, but few times back you have to go to a vendor and buy recharge from a vendor. Then that place of the vendor is the place of supply. If I am buying recharge from a mobile shop, the place of that mobile shop is the place of the supply. But if I am going for the online recharges, then the location of receiver, then I have to go for general rule. So online recharges, general rule will apply. You recharge scratch cards you are buying, then the place of that mobile shop, that vendor. If it's a postpaid, then the billing address. If it's a fixed line connection, then the device where it is installed. That is the place you are consuming your services. That will be the place of supply. Please ask me if you are having doubt in telecommunication or D2H or internet, etc. This is regarding the place of supply of telecommunication, D2H and internet services. I think this is clear. Very nice. There is one more. It's very easy. Financial and stockbroking services. Financial and stockbroking services means I am talking about the bank, I am talking about the stockbrokers. Interesting thing is they mostly they have our address in their records. So always the general rule will apply. So mostly if I am account holder of a bank, if I am availing any stockbroker services from any stockbrokers like Zerodha, anything, always I have to complete my KYC. So they always know my address, and that's why we'll always follow the general rule in this case. Even in insurance, the same rule will apply, because whenever I am buying the insurance, they will always ask me for the KYC. So banking, stockbroking, insurance, they always have the KYC. So they always have the record of location of recipient. So location of recipient is the place of supply. There is one more, advertisement by the government. If government is using the advertisement services, now very interesting case is whenever the government is doing advertisement, they will be doing advertisement in multiple states. Like government is introducing a scheme of Jan Dhan Yojana or Beti Bachao Beti Padhao Yojana or any other Yojana, Manrega. Then the ads will not only in the local newspaper, it will be nationwide. The hoardings, everything will be nationwide. So now what we have to do is, for advertisement services to the government, we have to bifurcate the services state-wise. So how many hoardings are in which state? So number of hoardings, number of pamphlets, number of advertisement, that will decide how much is the place of supply for which state. So if I am government is advertising in 2 different states, so they have to refer the number of advertisement in each state, and they will allocate the services according to the number of advertisement in each state, and then there will be 2 place of supply. Like 60% advertisement was in Haryana and 40% advertisement was in Delhi. So for 40% the place of supply will be Haryana, for 60% the place of supply will be Delhi. So in that case, in advertisement services, we always have to look where the advertisements are actually broadcasted. So we have to look at the numbers, we have to look at the data, that where the exact advertisement, where exact advertisements are broadcasted. According to that location, the place of supply will be different. That is for the advertisement services to the government. Okay. This is about section 12. This is about section 12. Yes. So section 12 talks a lot, but if I am looking from the bird eye view now, I will say that in most of the cases, actually general rule is applied. In most of the cases, general rule is applied. So general rule says that location of receiver, if it is not available in the record, then we have to go for location of supplier in B2C. Immovable property, what is the case? Immovable location of the immovable property, if it is not available, if property is outside India, then general rule will apply. For personal services like restaurant or personal grooming, it is always the services are actually consumed. Training, again general rule, but in case of B2C, where the training is actually held. Admission to event, again it's a very personal nature of services, so always where the event is held. But event organizing services, B2B general rule, B2C, if the event is in India, then the location of event, if again event is outside India, general rule will apply. Again, transportation of goods, B2B, general rule will apply. B2C, if destination is in India, then where the goods are handed over. If the destination is outside India, then the destination of the goods. Passenger transport, again general rule for B2B. B2C, then it will be passenger embarking his journey. Okay, where the passenger is embarking. But if it is a right to buy tickets in the future, general rule will apply. Onboard conveyance, always first scheduled departure of the flight. Telecommunication, again where the device is installed, what is the billing address, where you are buying your recharge voucher, what is the location of the recipient, that is the place of supply. For insurance, banking, stock broking, always the general rule, because we have they have the information, they have the KYCs in their records. And finally, advertisement, if the advertisement is by the government in the different states, we have to look at the advertisement data, where are the advertisement actually broadcasted, that will be the place of supply. So if it is in more than one state, the place of supply will be 2 or more states. Now, section 13, I can say, what about the health fitness services provided over internet? General rule will apply. If something is not specified anywhere, it will be covered in general rule. But yeah, it will be covered in general rule only. So I think, Vishal, general rule will apply, because even if they are providing the fitness services online, it will not be covered in the third point. It will be covered by general rule. General rule will apply. Location of receiver will be the place of supply. So when they will be billing you, they will charge you IGST if their company is in another state. Cult fit, you are taking an example of cult fit. Yes, cult. Okay, now nice. Moving towards the next, section 13. Section 13 is involved when there is one or the more person is, one is in India, one is outside India. I can say 90% transaction of section 12 and 13 are exactly same. Exactly same. Sir, where it is different? I will show you where exactly it is different. 12 and 13 are completely same. It will be different in only few cases. So I will explain to you where it will be different. Sir, immovable property, location of immovable property, it is exactly same. Admission to event, where the event is held, it is exactly same. Banking, now this is different. In case of banking, intermediary services and hiring of motor vehicle, normally we choose general rule location of receiver. But in case of cross-border transaction, we will be choosing location of supplier. Yeah, here the rule will change. Not location of receiver, it will be location of supplier. So bank, intermediary and hiring of motor vehicle up to 1 month, location of supplier. This is somewhat different. Transportation, now again this is different. This is same, but only for goods it is different. No, it is also same, because if the transportation of goods was outside India, it was always destination of goods in section 12 as well. So 12 and 13 exactly same for transportation, passenger transport, even services on board conveyance, it is exactly same. So sir, where it is different now? It is different only in the first case. Second case, general rule is also same, only second case is different. Listen. Services provided where physical presence of goods is necessary. Actually, they are talking about the repairing of goods services. If I am providing repair of goods services to abroad, or if I am sending goods abroad for repairing of services, what will be actual case where the repairing is happened? If the repairing is in India, then I can say place of supply is in India. If repairing is outside India, then I can say place of supply is outside India. So if the goods are uh, coming for repair in India, and then again I am exporting it outside India, then if the repairing is happened in India, where the services are actually happened, that we have to look. If the service is provided on goods from remote location, then again where the goods are actually present at the time of that service, that will be the place of supply. So in this particular case, we are actually looking at where the services, where the goods are located. If the goods are located in India while they are in repairing, then it is place of supply will be India. If the goods are located outside India, then the place of supply will be outside India. That is the different thing from section 12. And I think what is different is this OIDR services. This is very interesting. This is new as well. This is latest, and that's why we have to go for this OIDR services. Now, sir, what is OIDR services? Actually, OIDR means I am talking about the online services. I am talking about the online services that I am importing from outside India. What is the place of supply? The location of recipient of service. But now the point is, how can we decide the location of recipient if it is online? A company is selling online subscription from abroad. How can that company decide that the person is actually located in India? How can he trace that the person who is availing the services is Indian? What the clarification says, very interesting. Location of recipient will be in India if out of these 7, 2 conditions are fulfilled. This is very interesting. If out of these 7, even the 2 conditions are fulfilled, then we can assume that the person who is receiving the services is in India. What are the 7 conditions? He should have an Indian address. Yeah, or maybe he is paying from the Indian debit card. He has Indian billing address. He is paying from Indian bank account. His IP address is Indian. His country code, that is the phone mobile number, the country code is India, and his phone number is also Indian fixed landline. In this 7, if 2 conditions are fulfilled, any 2, like his Indian address, he is paying from Indian debit card, he is paying from Indian debit card and he is having Indian billing address, he is paying from Indian debit card and he is having Indian bank account, he is paying from Indian bank account and he is having Indian IP address, he is having Indian IP address and he is also giving his country code as +91, that is Indian country code. So if he is fulfilling, he is able to fulfill 2 conditions out of the 7, then I can say that in case of online services, the person who is receiving the services is Indian. And in that case, it will be import, and in that case, the GST will be leviable under section 71B. 71B was intended for the purpose of covering online services under GST. So if the person is Indian, if he is having any 2 conditions fulfilled out of 7, and the company providing the services is outside India, it will be import of services and GST will be leviable in India. So this is mostly about section 13. Some cargo handling and some R&D services are given, that is not that important. And MCQs of place of supply is from question number 63 to question number 83. So question 63 to 83, you will find out the MCQs for place of supply. Again, I am saying you one thing, if you are able to understand section 12 properly, section 13 is mostly same. There are a slight difference in section 12 and 13, and I can assure you the question they can ask from the MCQs in only from these 4 sections, 10, 11, 12, 13. 10 talks about the goods, 11 is not that important, 12 and 13 is very important, that talks about the services. They might ask a question from section 12, they might ask a question from section 10 or from section 13. 12 and 13 is mostly same, only there is a slight difference in section 12 and section number 13. Mostly they are exactly same. So this is about the place of supply. Question number 63 to question number 83. All the MCQs in your MCQ booklets are covered for place of supply questions. So you have to cover from question 63 to section 83. That is all about the place of supply. Now we have another topic to discuss. If you are having any query, please let me know. Otherwise, I have another topic to discuss, and that topic is also very important. ITC, that is regarding input tax credit. Yes. So we are starting ITC. It is very important. They can ask a lot of MCQs from this chapter as well. These two topics, this topic is also very important. ITC, input tax credit. Actually, ITC has a lot of section, 16, 17, 18, 19, 20, 21. But in your syllabus, when I read your syllabus, it was exactly given that in ITC you have to cover conditions and blockage of ITCs, reversals of ITCs. When I am not allowed to claim ITC, when I can claim ITC, that is the topic which is covered in your syllabus. And what are the conditions for claiming ITC? That is mainly in your syllabus. So I will be covering section 16 and section 17. I can assure you there's a 99% chance they will be asking a question from either section 16 or section 17 subsection 5. Section 17 subsection 5 is very important because that section talks about the blocked credits when the credit is not allowed. So these are the two major sections that we have to cover in ITC. Yeah. ITC eligibility, block credits and methods of reversal. Yeah, that is the main point that is covered in section number 16 and section number 17. So first of all, what is ITC? Very simple. It's a credit of input services and capital goods on the tax paid on the purchases. Basically, yeah, section 16 and 17 of CGST Act. Section 6 to 13 of IGST Act we have covered in the place of supply notes. Now again we are switching over to CGST, and CGST there are two important sections, section 16 and 17. So first of all, what is the meaning of ITC? It is very simple. If I am buying some material, I am buying some input, I am buying some input services, or if I am buying some capital goods, I am buying some machines. So in all these cases, I can claim the credit of the tax paid if I am a registered person. So if I am registered under GST, is there any doubt? Gunjan and Chandigarh Singh, is there any doubt? If you have any doubt, you can ask me in the chat box. I will cover your doubts as well. First of all, no? Okay, you are actually raising the hand. Maybe it was honest mistake. Okay. Okay, I am ignoring. Yes. So the point is, in case of ITC, what we have to understand is, if I am purchasing material, I am using any services, or if I am buying machine, I can claim credit of all these things. Means I can claim credit of all the purchases of the business, whether it is my input, whether it is my input service, and whether it is my capital goods. What is the important thing? It should be for the furtherance of business. The purpose should be furtherance of business. If the purpose is furtherance of business, then of course I can claim ITC of the input services and capital goods. The purpose should be furtherance of business. So all the three definition talks about the same thing. Any goods other than capital goods used for the furtherance of business. Any goods which are capitalized in the books are capital goods but should be used for furtherance of business. Any services which are used for furtherance of business. Means all these cases, all these three cases, what is important? That any purchases I am doing, it should be for the furtherance of business. First of all, government will not allow any credit for personal use. They will be giving credit only and only for the business use. They are not give you any credit. They will not give you any credit for personal use. Yes. So if I am buying material, if I am buying capital goods, if I am buying services, my first thing that I have to check whether it is useful for my business or not, whether it is necessary for furtherance of my business or not, whether I am buying it for the use of my business or not. If yes, then I can claim credit. Otherwise, if I am not buying it for business, I cannot claim credit of that. Are you getting my point? Yes, very nice. So first of all, if I am buying anything, I have paid any tax, first of all, it should be for the furtherance of my business only. Now, next important thing, this is very important. हिंदी में एक मुहावरा है that शेर के मुंह में से शिकार निकालना, like it is very difficult. The same thing is with the ITC. Claiming the ITC means you are asking the government to refund your tax. It is equally, it is like same. So it is very difficult. The government will impose a lot of conditions if you want to claim the credit. So if I want to claim any ITC, I have to fulfill a lot of conditions which are given in section 16. If I am eligible, then only I will be eligible for credit. Otherwise, government will not allow credit. So what are the conditions which are covered in section 16? Look at the condition. The first condition, that is to claim ITC, the person should be registered. The person who is claiming should have GSTIN number. Of course, a person who is not registered, who is not having GSTIN, why he is claiming the credit? Of course, he will be claiming credit only if he is registered. So the very first condition is the person who wants to claim the credit should be registered person. Second is again very important. The person who is claiming the credit should have the possession of tax paying document. Tax paying document. Tax paying document means either he should have an invoice, or if he has a debit note, then he should have a debit note. If he is importing something, then he should have a bill of entry. So he should have a proof that I had paid the tax, and this is the proof of that paying tax. So invoice, debit notes, challans, and also bill of entry in case of import. These are the tax paying documents. So he should have the tax paying document. What people generally does is they just claim the ITC even if the invoice is missing. I can tell you, if invoice is missing, you are not eligible to claim ITC. If you don't have the possession of invoice, you cannot claim ITC on that. So you should have invoice in your hand if you want to claim any ITC. Third condition is also very interesting. Goods and services should be received. I have invoice, I am registered, but goods are not yet received. I cannot claim ITC till the goods and services are received. So sir, whether I have to wait that once the goods will be received, then only I can claim ITC? Yes. This is very important. So the another important condition is, for claiming the ITC, the goods and services should be received. Sir, but what if I am receiving the goods in lots? Like I bought 10,000 kg of goods, but the person dispatched only 2,000 goods right now, 2,000 kg. Remaining 8,000 he will be dispatched in installment. So whether I can claim the proportionate credit? I am asking a question from all of you guys. Can I claim the proportionate credit according to the receipt of the goods? Yes or no? No, 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 no. I will get the credit once complete goods are received. Means only on the receipt of the last installment I can claim the credit. Before that I am not allowed to get the credit. So I will get the credit only on the receipt of the last installment. This is again very important. Sir, you are saying that you should receipt the goods. Sir, but what about the bill to ship model? We have discussed it right now, na? Example, Patanjali ordered something to the supplier, but they want to deliver it to the job worker. Now the goods are received in the premises of the job worker, but the buyer is the Patanjali. So my question is whether the Patanjali can avail the credit. He has not received the goods. The goods are actually received by the job worker. Patanjali is the third person who is ordering the goods. Whether Patanjali can avail the credit? Yes, they can avail the credit. Once the goods are received in the premises of the job worker, they can avail the credit. It will be treated as deemed receipt of the goods. If on your instruction the goods are delivered to the place where you want the goods to be delivered, then when the goods are delivered to that place, you can claim the ITC. It will be deemed as receipt at your premises. Okay, so Patanjali is ordering goods to the supplier. The supplier is delivering the goods to the premises of the job worker. Patanjali can claim credit where they are not actually receiving the goods. Goods are actually received by the job worker, but Patanjali can claim credit of that goods. It will be treated as deemed receipt of the goods. Job worker may be in another state, job worker may be in same state. Whether the tax will be of CGST, SGST, whether the tax will be of IGST, it does not matter now. if there is an invoice, then of course invoice will be prepared in the name of Patanjali only. If if they charge IGST, the Patanjali will claim the credit of IGST. If they charge CGST, SGST, the Patanjali will claim credit of the CGST and SGST. Now you are talking about the place of supply, and I am talking about the ITC. So it doesn't matter which nature of tax they are charging. Whatever they are charging, Patanjali can claim credit. However, the goods are not actually received by the Patanjali, goods are actually received by the job worker. But Patanjali can claim the credit. It will be treated as deemed receipt of the goods. If the goods are delivered to the third person, the receiver can claim the credit. It will be treated as deemed receipt of the goods. This is the third important condition for ITC. In case of goods are received in lots, you can claim the credit only on the receipt of the last installment. So you have to wait for the receipt of the last installment. Then only you can claim the credit. Fourth point is again very interesting. Tax on such supply should be paid to the government. Yeah. So if I have paid the tax to the seller, but seller didn't pay the tax to the government. Like I bought some commodity, I received the goods, I have an invoice, I paid the consideration to the seller, but the seller doesn't file his return, he doesn't pay this tax. This is a very difficult and harsh rule, but the rule says if the seller is not paying your tax, you will not get any ITC. And for this, they have introduced a concept of Gstr3b. So only you can claim credit if the purchase is actually auto-populated in your Gstr3b return. If in your Gstr3b there is no transaction, purchase is missing, you cannot claim ITC on that. Because if the Gstr3b is not auto-populated with that transaction, it means seller does not file his return. Seller didn't pay the tax. And if the seller didn't pay the tax, you cannot claim ITC. This is very interesting. So you can claim ITC only when the seller pay the tax to the government. If the seller didn't pay the tax to the government, even if it is not my mistake, my credit will be blocked. I cannot get the credit if the seller didn't pay the tax to the government. This is a very harsh rule. But this is there, and that's why we have to be very careful, because I can claim ITC only if it is auto-populated in my Gstr3b. If that transaction is not covered, it is missing from my 2b, I cannot claim ITC on that transaction. Otherwise, department will recover that ITC with interest, with penalty later. Next. So, 4 conditions. What are these 4 conditions? The person should be registered. The person should be in the possession of tax-paying document. The person should receive the goods or the services. The tax on such supply should be paid to the government. Now, if I am eligible for claiming the ITC, I also have to file the return. It will not automatically create it in my ledger. For claiming the ITC, I have to disclose that ITC amount in my Gstr3b return. So when I will be filing Gstr3b return, in that return I will be disclosing my ITC amount, and that ITC amount will be credited in my electronic credit ledger. So automatically the ITC will not be credited in my ledger. To claim the ITC, I have to file a return. That return is called Gstr3b. In that return, I will disclose the amount of ITC I want to claim, and then my credit will be credited in my electronic credit ledger. So I also have to file a return to claim the ITC. The return is Gstr3b. Okay. 5 conditions. Condition number 6. This condition is again very interesting. Government will not allow me to claim ITC if I have claimed depreciation under Income Tax and on Income Tax Act on the tax component. This is very interesting. Look at the example. I bought a machinery for rupees 10 lakh and I have paid a GST of rupees 1,80,000 on that machine. So the total price I have paid for the machine is 1180. What I will do is I will claim ITC of 1,80,000, but I cannot claim depreciation on 11,80,000. No. Because government will say that when you are claiming the credit of 1,80,000, now your actual cost is not 1180. Your actual cost is only 10 lakh rupees, because you are getting the refund of that 1,80,000. So how can you claim a depreciation under Income Tax Act on 1180? You should claim depreciation under Income Tax Act only on the cost, that is 10 lakh. 1,80,000 you are claiming as a credit, so you cannot add that in your cost, and you cannot claim depreciation on the tax amount. And if you are claiming the depreciation on the tax amount, we will block your ITC. We will not allow you to claim the ITC, because आप दोनों हाथों में लड्डू नहीं रख सकते. You cannot benefit from both. You cannot claim the deduction under Income Tax Act. Also, you want to claim ITC as well. If you are claiming the deduction of 1,80,000 under Income Tax Act, you cannot claim ITC. If you want to claim ITC, you cannot claim depreciation under IT Act. Okay, so this is one more important condition. Now, next condition is very interesting, very interesting. Time limit to claim ITC. Now I need attention from all of you guys, because this is very important. What is the time limit to claim ITC? The time limit to claim ITC is earlier of these two dates. What are these two dates? If I missed my credit because I didn't have the invoice, my invoice was missing, so I cannot claim the credit. My goods was not yet received, so I cannot claim the credit. Tax was not paid to the government, so I can't claim the credit. So for example, I have a invoice of financial year 21-22, okay, and I missed the credit. I didn't take the credit because of any condition. But right now I fulfilled all the conditions. I am registered, I received the goods, I have the invoice, the tax has been already paid. All the conditions are actually fulfilled now. But the bill belongs to the last financial year. Can I claim the credit now? That is a question from all of you guys. Yes, I can claim the credit, and I can claim the credit. No, it is not update. It is already updated. This is the Karthik. This is the due date of claiming the ITC. What is the due date? Due date of filing the return, periodical return. So for of which month? Of the succeeding of the September month of the succeeding financial year. So for the financial year 21-22, I can claim the credit up to the return I will be filing for the month of September. So it is very important that I can claim the credit of the last financial year within 6 months from the end of the financial year. So I can, no, it's not November, it's September only. It may be extended for this year only, only for this year, but in the law, generally it is September. Maybe it is extended because of some reason in this year, but not, it is for the buyer. Yeah, it is for the buyer. I am talking about the buyer. It is for the buyer, yeah, it is for the buyer. Listen. Buyer can claim the credit. Again, listen. Buyer can claim the credit only if his credit was missing for the last financial year. Then he can claim the credit only up to the month of the September, or annual return, whichever is earlier. So if he has not filed the annual return, he can claim the credit up to the September month. Or if he has already filed the annual return, then he cannot claim any credit after the filing of the annual return. So whichever is earlier. So September of the succeeding financial year, or annual return, whichever is earlier, is the time limit for claiming the credit for the buyer. I am not talking about the seller, I am talking about the buyer. Buyer can claim ITC only up to the month of September for the last financial year, or filing of annual return, whichever is earlier. So this is very important time limit. Okay, so what is the due date? Due date of claiming the credit. What is the time limit for claiming the credit? September month return, or financial year, whichever is earlier. What are these three dates? Actually, these are the due dates of Gstr3b. 20th October, 22nd October, or 24th October. So whenever you are filing Gstr3b, these are the due dates. So claim the ITC in the return of the month of September, which you will be filing on the 20th October or 22nd October or 24th October. After that, if your credit lapse, if your credit you didn't claim the credit in the month of the September, then your credit will be lapsed. Now you cannot claim the credit after the month of the September. Okay. So claiming means I am talking about the availment. Yeah, I am not talking about the utilization. I am talking about the availment. I have already told you I can utilize the credit infinite in an infinite time period. There is no time bar on the using of the credit. The time bar is to claim the credit in the return. So whenever I will be filing the September month Gstr3b, if I have any credit which was left in the financial year, I can claim that credit in that return. After that, it is not allowed. Okay? Yeah, basically 6 months. Or if you have filed annual return before completion of the 6 month, then after filing of annual return, you cannot claim the credit. So annual return or 6 month, whichever is earlier. Depends. Annual return, the due date of annual return is 9 months, but maybe if the company is filing the annual return before September, that they can file the return before September as well, na? They can file the return in August as well. So if they file the return in August, then after filing the annual return, you cannot claim any missing credit of the last financial year. एनुअल रिटर्न के लिए एक्चुअल डेट, एनुअल रिटर्न के लिए हमेशा एक्चुअल डेट. 3B के लिए ड्यू डेट है, बट एनुअल रिटर्न के लिए हमेशा एक्चुअल डेट. Okay, very simple. Claiming means I have a credit. I just want to put that credit into my ledger. It's more like पेटीएम का बैलेंस का अजम्पशन ले लीजिए. मेरे बैंक अकाउंट में मेरा अकाउंट में बैलेंस है, मैंने उसे पेटीएम के वॉलेट में ऐड कर दिया. दैट इज द क्लेमिंग. दैट इज द क्लेमिंग. Now whenever I will be using that Paytm wallet balance for doing the recharges, that is called utilization. So when I will be paying the tax from that ITC, that is called utilization. There is no time bar for that. Yeah. In my return, I have to file the return, and in that return I have to claim the credit. If I forget that credit, then I can claim that credit up to September. But अगर उसके बाद भी claim नहीं किया, then it's gone. अब पिछले साल का आप उसको क्लेम को वापस आगे नहीं ले जा सकते, वो खत्म हो जाएगा, वो लैप्स हो जाएगा, फिर आप उसको आगे पास ऑन नहीं, आगे क्लेम नहीं कर पाओगे. यूज आप कितने भी सालों में कर सकते हो. देयर इज नो बार ऑन यूटिलाइजेशन. ओके, नाइस नाइस. वी हैव द लास्ट एंड फाइनल कंडीशन फॉर सेप्टेम्बर. दिसंबर का कोई यूज ही नहीं है एक्चुअली दिसंबर का कोई यूज ही नहीं है, बिकॉज आफ्टर सेप्टेम्बर इफ आई हैव नॉट फाइल द रिटर्न, मीन्स मैंने 3B फाइल कर दिया सितंबर का, पर मैंने अभी एनुअल रिटर्न फाइल नहीं किया, तो मैं अब नहीं फाइल ले सकता आईटीसी. मैं नहीं ले सकता बिकॉज मेरा सितंबर मंथ का 3B जा चुका है. तो अगर मैंने एनुअल रिटर्न फाइल नहीं किया और मैंने 3B सितंबर का फाइल कर दिया है, उसकी ड्यू डेट चली गई है, अगर कोई पिछले साल का आईटीसी रह गया है, अब मैं उसको एनुअल रिटर्न में क्लेम नहीं कर सकता. विच एवर इज अर्लियर. गॉट इट? आ गया सब लोगों को समझ में? वेरी नाइस. ओके, so there is last condition, and the last condition is very simple. Buyer can claim the ITC even on the credit purchase. Yeah, like I bought something on credit. I have an invoice. I received the goods. The tax is paid by the seller, but I didn't pay the consideration to the seller because I bought the goods on credit basis. So in how much time I have to pay the consideration? There is an interesting bar, 180 days. Yeah. So this is very interesting. If I bought something on credit, all the other conditions are actually fulfilled, then I can claim the ITC, but the condition is I have to pay the consideration to the seller within 180 days. And if I am not paying the consideration in 180 days, then the credit claim is required to be reversed. So it is very important. There is one more condition to pay. To whom? To the seller. Condition to pay consideration to the seller. That consideration is required to be paid within 180 days. From which date? Okay, from the date of invoice. So from the date of issue of invoice, So from the date of issue of invoice, I have to pay consideration within 180 days. Avish is asking, sir, what if the credit period is 200 days? Then don't claim ITC right now. Claim ITC only after paying the consideration. Because if you are claiming the ITC and if you fails to pay within 180 days, then after expiry of 180 days, you have to reverse that credit with interest. With interest. So why to pay the interest unnecessarily if you are asking the credit period of 200 days? You can claim credit after 200 days when you paid the consideration. Yeah. Okay, about 8 or 7 you want to ask about? 7. This example is again what we were discussing now. The example is about the same, that date of annual return, date of 20th October 2020. In which case? First, second, third, fourth? First case, 20th October is the due date of filing Gstr3b for the due date of filing return of September month. So 20th October is the last date to claim the credit for the last financial year, because this is the due date of filing GSTR return in which I will be claiming ITC for the month of September. Okay, so 28th October, maybe 20 to 24. Actually, there are 3 different dates. If you opted for quarterly return, then it might be 22 or 24. If it is a monthly return, then it is 20th October. So that is the due date, 20th October. Okay. Now, the condition of payment is very simple. It is like if I have bought something and I bought something for credit, then I have to pay the consideration within 180 days. Otherwise, I have to reverse the ITC. So if you are getting a credit period of more than 200 days, more than 180 days, then don't claim the ITC at the time of buying the goods. Claim the ITC only after paying the consideration. Sir, if seller didn't file the Gstr3b up to the due date, then buyer is not allowed to claim the ITC. Yes, if the seller is not filed Gstr3b, it means he didn't pay the tax in that month. You cannot claim ITC till he paid the tax. So wait for the auto population in your Gstr2b. It means he has paid the tax, and then only you can claim the ITC. Sir, if credit is on 19th October, but I have to book an entry in the, you have to book the entry on the September only, because you are filing 3B for the month of September. So of course, all the transaction of September month will be disclosed in GSTR 3B of October. So yeah, the entry should be in September only. Okay, great. So these are the 8 different conditions for claiming ITC. I think now everybody is familiar with all the conditions. The person should be registered. I should have a tax paying document and it should be in my possession. It should not be missing. Tax goods and services should be received. If they are receiving in the lots, then I have to wait for the last installment. If the goods are received to the third person, then it will be deemed to be received at my premises. Fourth one is tax to be paid to the government. It means it should be auto-populated in my GSTR 2B, so I can claim ITC only according to GSTR 2B. Fifth one is I have to file the return to claim ITC. For this, I have to file GSTR 3B in the return, in which I can claim ITC. Condition number 6 is on the tax amount, I cannot claim the depreciation. Otherwise, department will not allow me to claim ITC on that. Condition number 7 is time limit to claim ITC. Very simple. Due date of filing periodical return for the month of September of the succeeding financial year, or the date of filing annual return, whichever is earlier. That is a time limit to claim ITC. And finally, if I am claiming the ITC, I have to pay the consideration within 180 days. Otherwise, if I am fails to pay consideration within 180 days, my ITC will be reversed. Even I have to pay the interest for the reversal. I can again claim the ITC, but only once I have paid the consideration. Then only I can claim the ITC. Got it? These are the 8 conditions covered under section 16. Now we will be discussing a very interesting clause, section 17 subsection 5. And I can guarantee you, if the paper is about something practical, if they will ask some practical aspects, they will definitely ask about 17 subsection 5, because this is very, very important for the MCQ paper as well. 17 subsection 5 that talks about the blocked credit. And now listen carefully. In the basics, we have discussed that I can claim credit on anything I am buying for the purpose of business. Now I am saying no. You cannot claim credit of those purchases, those services, those inward supply which are covered in 17 subsection 5. Harish is asking that seller paid the tax to the government, but seller is not paid to the buyer. Means buyer didn't pay the consideration to the seller, but seller paid it to the government now. This is the time limit for 180 days now. Buyer has to pay the consideration to the seller within 180 days. He can claim the credit, but if he fails to pay within 180 days, then he has to reverse the credit with interest. So he has to be very cautious that if he wants to, if we get more credit period, then you cannot claim the credit. You will claim the credit only after paying the consideration. Okay, nice. 17 subsection 5. Now, first of all, there are some blockage, and we are discussing the blockage. First of all the credit which are blocked, which is relating to a motor vehicle. Yeah, now listen carefully. There are a lot of students, they always ask me one thing, sir, gaadi kharid rahe hain, buying a car, whether we can claim ITC on the car. I can say no. Block credit means it is not allowed to claim the credit for everyone. There are only few exceptions who can claim the credit of this particular transaction. Not every person can claim credit of this transaction. That is called the block credit. So now the credit is blocked for, first of all, cars. What is exactly written? Motor vehicle used to carry not more than 13 passenger. So car, MUVs, SUVs, passenger cars, passenger SUVs, passenger MUVs, I cannot claim credit on that. So if I am buying a car for my business, bike is also not covered because having a capacity of less than 13 passenger. All the motor vehicle which has the capacity of less than 13 passenger is blocked. All the passenger motor vehicle having capacity of less than 13 passenger is blocked. Yes? Second, aircraft and vessel, passenger aircraft and passenger vessels, ITC is also blocked, but who can claim the ITC on these transactions? Means on car, on aircraft, on vessel, who can claim the ITC? First, who is doing the business of motor vehicle? So the showroom owners, the second-hand car dealers, they can claim the ITC of the car because for them, car is not their personal asset, car is not their asset, car is stock for them. They are doing the business of car, they are dealing in car, so they can claim the credit of car. Those who are doing the business of transportation of passengers, like taxi operators, airlines, ship companies, they can claim the credit of vessels, aircraft and car because they are doing taxi business or hiring businesses. And third one, who can claim the credit of the motor vehicle, passenger motor vehicle, who are teaching driving skills, imparting driving skills, driving schools, flying schools, they can claim the credit of these motor vehicles. So basically, I am a chartered accountant, I am registered a person under GST. Can I claim a credit of the car bought for my business? No, I cannot claim the car. I cannot claim the ITC of the car because I am not dealing in cars. I don't have any transport business and I am not teaching driving skills to anyone. So if I am buying car even for my business use, but it is not a business of cars. I am not transporting. I am not a transportation. I am not doing a business of transportation of passengers. I am not doing a business of driving skills, teaching skills. Then I cannot claim credit of the car or the vessel or the aircraft. So this is blocked. So who can claim the credit of the passenger car? Who can claim the credit of the passenger motor vehicle? Who can claim the credit of the passenger aircraft? Who can claim the credit of the passenger vessels? Only those businesses whose main ingredient is motor vehicle. Like for them, car is their stock. If they're doing the transportation of passenger business, or teaching driving skills. They can claim the credit of the car. Yeah. So if it is a bus, you can claim the credit. Yes. I am talking about the car. I am just pointing out the motor vehicle having the passenger capacity less than or equal to 13. If there is a, yeah, they can claim, but they have to justify that that is for the purpose of their business. If they are buying a bus for the purpose of business, they can, like a chartered accountant company is buying a bus for transportation of their employees, they can claim credit. They can claim credit. Of course, they can claim. Blockage is only on the motor vehicle which is not having the capacity more than 13 passengers. Okay. Mm, hiring is also blocked in another category. I will cover that. Renting of motor vehicle. Renting of motor vehicle for employees. If I am renting a motor vehicle for employees, I cannot claim credit. It is actually covered in blockage later. I will discuss that. Can GST on the paid on the car can be capitalized? Yes, Manoj, we have to capitalize it, because if I am not getting any ITC, I can capitalize the GST amount in my gross block. Of course, I can capitalize that because I am not claiming any ITC on that. ITC is blocked. I can capitalize that amount. Very nice. There is one more interesting thing. When the ITC of car is blocked, how can government give the ITC of the insurance and maintenance of the car? Of course, if the primary item is blocked, ancillary activities relating to that item should also be blocked. So yeah, insurance on maintenance of motor vehicle is also blocked. For those where if I cannot claim the credit on motor vehicle, I cannot claim the credit of insurance and maintenance of that motor vehicle. If I can claim the credit of the motor vehicle, I can claim the credit of their insurance and maintenance as well. So if I can claim the credit of the motor vehicle, I can also claim the credit of the insurance and maintenance. So if my ITC is blocked for motor vehicle, I cannot claim ITC on the insurance and maintenance of motor vehicle as well. Sir, what is the reason of such blockage? Actually, government blocked the credit on motor vehicle because motor vehicle is of a personal use item. Even if I am buying in the name of the business, most of the uses will be personal, and that's why government is not allowing credit on motor vehicles. So this is the blockage. Who will get the credit? Sir, those entities whose business dependent on the passenger motor vehicle. They are dealing in the passenger motor vehicle, they are doing the business of transportation of passenger passenger services, or they are teaching driving skills. In that case, they can claim the ITC of the passenger motor vehicles, and if they are claiming the ITC on the passenger motor vehicle, they can also claim the ITC on the insurance and the maintenance services. So if the capital goods ITC is blocked on motor vehicle, their insurance and maintenance services is also blocked. This is about the first category, motor vehicle related services. Now, we can make this very interesting. Look at the photograph on your screen. Again, there are some clues because the next blockage is actually from these. All the blockages are covered in this photograph. Yeah, what you can see is, you can see a picnic spot where a very beautiful and fit waitress is serving food, and you are enjoying the vacation. Yeah, this is what the picture shows. Yes. So now we have to find out the items which are blocked in this particular photograph. Look at the items. Blocked: food and beverages, catering, beauty treatment, cosmetic and plastic surgery. 4 are already covered in the photograph. Membership of gym and fitness center, employees vacation, and 2 more: renting of motor vehicle and health insurance and life insurance. These are the services. Business generally use that services for their employees. They bought food items for their employees. They uses the services of catering for their annual meet or for their parties in the offices. They provide the beauty treatment, cosmetic and plastic surgery, membership of gym, life insurance and health insurance for their employees. They hired a car for transportation of their employees, or even they are actually bearing the expenses of their vacations and leave travel concessions for their employees. All these are blocked. All these are blocked. So if I am buying food, so many people, many clients came to, when the GST was introduced now, many people also attach the bill of restaurant कि सर प्लीज़ इसका भी क्रेडिट ले लेना अपने रिटर्न के अंदर. So no, you cannot claim the credit of food items, you cannot claim the credit of the catering, you cannot claim the credit of the beauty treatment services, you cannot claim the credit of the cosmetic and plastic surgery, you cannot claim credit of the renting of motor vehicle, you cannot claim credit of the health insurance and life insurance for employees, you cannot claim credit of membership of gym, and you cannot claim credit of employees vacation and leave travel concession. Out of these 8, you can remember minimum 5 to 6 only from this photograph. Yeah. What are these? Fitness, beauty treatment, membership of gym, food beverages, catering, cosmetic and plastic surgery, employees vacation. All these are actually covered in the photograph only. Okay. So now, sir, Aman is asking, sir, accommodation on hotels are also covered. If the accommodation in hotels are for business purposes, you can claim the ITC. If the accommodation in the hotels are not for the vacation of the employees, if the accommodation in the hotels are for business meetings, you can claim the ITC of that. But you cannot claim any ITC on the food and beverages. Hotel is allowed, food and beverages are not allowed. Catering is not allowed. Beauty treatment, cosmetic, plastic, renting, life insurance, health insurance, gym membership and vacation is not allowed. Okay, renting of motor vehicle. Renting of motor vehicle for the employees. For transportation of employees, you are hiring a car. So they are not allowing you a credit on buying a motor vehicle. How can they allow a credit on renting a motor vehicle? So they are not allowing a credit on renting of motor vehicle as well. Uh, Actually, I think it is it is not only for employees. If I am hiring a car, even for the transportation of my customers, like a client is coming from the airport and I hired a car to bring that client to the office, it is not allowed. It is employee related, but the law clearly doesn't say that it will not be allowed only if it is used for employee. So if even it is used for the customer, it will not be allowed. When it is allowed, only there are 2 exceptions. What are the exceptions? Second one is very interesting. Statutory obligation. I am availing the life insurance and health insurance services for my employees because law binds me to do that. Then I can claim the credit. If I am providing the food and catering services to the employees because as per the Factories Act, I have to maintain a factory canteen. Now I can claim the credit of the food items because now it's an obligation of law. If it's an obligation of law, I can claim the credit. This is the second exception. What is the first exception? I am not using that for my employees. I am also providing the same category of services, or I am also providing the same category of supply to my customer. Like I am buying the food items not for my employees, not for my consumption. I am buying the food items because I have a restaurant. I have a hotel, and I will be supplying that food item to my customer. I can claim the ITC of that. A marriage garden is using the catering services. A marriage garden is using the catering services. He can claim the ITC of the catering services because he will not be using that catering services for his own consumption. He will be providing the catering services to his customer. So if they are in similar line of business, they are doing same category of business, they can claim ITC because now they will not be consuming that service, they will be supplying that service to their customer. If they are supplying that service to their customer, they can claim the ITC. And second, if it's a law obligation, they can claim the ITC. Other than that, these ITCs are blocked in these 8 different blockage: food and beverages, catering, beauty treatment, cosmetic and plastic surgery, renting of motor vehicle, health insurance, life insurance, membership of gym and fitness center, employees vacation and leave travel concession. These are the blockages. Yeah. They can claim. They can claim. They can claim because they are in the similar line of business. Their fitness trainer is not for their employees. Their fitness trainer is for their customer. So of course they can claim the ITC if they are paying in GST on fitness trainers. Of course they can claim. Any other doubts? Company guest house service maintain कर रही. Company is maintaining a guest house. So in that guest house, if they are buying food and beverages, they cannot claim ITC of food and beverages, but they can claim an ITC on furniture. Yeah. Yeah, man. Bus is allowed. Bus is allowed. There is no problem with the bus. I have told you, I am talking about the passengers having the capacity less than 13. So if a company is buying a bus for transportation of employees, they can clearly claim the ITC. There is no objection in claiming the ITC for bus. Truck, bus, tractor, JCB, bulldozer, crusher, ITC is not at all blocked. I am talking only about the passenger vehicle having a capacity less than 13. Got it? Nice. Not more than 13. Not more than 13. Okay? Nice. Now we have to talk about the construction related inputs which are actually disallowed. So I am constructing a property. Sir, for my personal use, for my business use, of course for my business use. If it is for my personal use, there is no question of claiming credit, because if it is not for the furtherance of business, how can I claim credit? I am talking about, I am constructing a office. I am constructing a civil structure in my factory. I am constructing a shop for my own. So I will be buying a lot of cement, bricks, works contract services, construction related services. Can I claim credit on that or not? So now this is very important. Works contract service, construction material or other services which are used for constructing any immovable property, then ITC is blocked. Yes. You cannot claim ITC on the construction material you are using for constructing a property. Constructing an office, constructing a shop, constructing a factory, you cannot claim credit of that construction material, construction services. Only it is allowed if you are constructing any base or foundation of plant and machinery. If you are creating a civil structure for installing a plant and machinery, for that civil structure, if you are buying something, you can claim the credit. But if you are constructing a office, you are constructing a shop, you are constructing a factory, you are constructing a civil structure for your business, no ITC is allowed on construction material. If you are using a works contract service, you cannot claim ITC if you are using that works contract service for your construction of the property. So first of all, construction ITC on the material, ITC on the services is blocked. Only it is allowed if it is a construction of plant and machinery. You are constructing a foundation, a base for running plant and machinery. For that, you can claim the ITC. Not control room, not the factory. I am talking about the foundation and base on which the plant is attached. That construction is allowed, but other construction is not allowed. What is the logic not to give the ITC? The logic is that construction is a very long term, a building is a very long term asset. So giving you the ITC means you are charging the amount of building to the customer. That is actually is a very low depreciable asset. So government thinks that if you are constructing a building, you are not going to charge that cost of building from the customer. So there will be no cascading effect, and that's why they are not allowing the construction material ITC. Only civil construction, actually construction of any immovable property. Yeah, but there is one interesting thing. If it is not a construction, it is merely repairing. It is not a construction, it is merely repairing. Means I didn't capitalize the expenditure in my books of account. I just debited in my P&L. Like I bought some material for repairing of an office, and I debited that expense in my P&L account. Then it is not a construction and ITC will be allowed. So now this is very interesting. If I spend some amount on the repairing of my office and that is not a construction because I didn't capitalize that in my books of account, I can claim the ITC. When I cannot claim the ITC, when I am capitalized that I have capitalized that expenditure in my books of account because it was not a repairing, it was a construction. There was something add-on in the property. There was something new constructed in the property. If that was the case, I am not allowed to get any ITC of that construction material. So this is very interesting. But if the construction is of plant and machinery, I am allowed to claim the credit because construction on plant and machinery is allowed. But construction of your own property for business purposes is not allowed. Even if it is for the business purposes, it is not allowed. It is allowed only if repairing. Yeah, repairing is allowed. Repairing is allowed because in case of repairing, you will not capitalize that expense in your asset. You will be charging it as your cost. You will be debiting it in your P&L account. So repairing is always allowed, whether it is for plant and machinery, whether it is for building, it is always allowed. But construction is allowed only for plant and machinery. Construction for any movable property other than plant and machinery, credit is not allowed on that. Repairing of any business premises, whether it is your office, whether it is your guest house, whether it is anything, if it is a business premises and you are repairing, you can claim the ITC of that repairing material. Repairing is allowed, construction is not allowed. Okay. Saurabh, what is important is what you have done in your books of accounts. If any addition, modification, alteration is capitalized, then it's a construction. So if you have done anything and you debited in your P&L account, then it's not a construction, it's a repair. And if it's a repair, then ITC is allowed. If it's a construction, you have capitalized that amount in your books of account, then it's a construction, ITC is not allowed. Got it? Yeah, then it is a construction. If it is not capitalized, then it is not a construction. You can claim the credit. Very nice. Now one more thing. Plant and machinery means normally what is plant and machinery, but plant and machinery will not means these are the exclusions from the plant and machinery. Building, land. Important is telecommunication tower and pipeline fitted outside the factory. So if I am constructing a telecommunication tower, it is not treated as plant and machinery. If I am constructing a pipeline outside my factory, it will not be treated as plant and machinery, means ITC will be blocked on construction material used in construction of telecommunication tower because it will not be treated as plant and machinery. Normal machinery, normal plant, that will be treated as plant and machinery, but telecommunication tower and pipeline fitted outside the factory will not be treated as plant and machinery. Constructing road, you cannot claim the ITC of constructing road because that is not a plant and machinery. So if you are constructing roads, that is not a plant and machinery, you cannot claim ITC on that. Okay, so this is about the plant and machinery, this is about the construction, and this is about the blockage of ITC on construction. Sir, construction includes elevators, AC ducts, equipment installed during construction, whether ITC is allowed. Actually, immovable items. Movable items, it will not be treated as construction. I am talking about what I am capitalizing in my building. Whether the AC ducts, elevators will be capitalizing in the books of accounts and it will be included in the cost of the building. If yes, then it is also a part of construction. If no, then it is not a part of construction. So it depends upon that whether that AC ducts, capitalization or equipment is a part of building or not. If you are adding the cost of elevators, AC ducts and equipment in the part of the building, then it will be treated as construction and it will be blocked. If the pipeline is fitted outside the factory, construction of that pipeline outside the factory will not be treated as plant and machinery. ITC will be blocked on that. Okay. There are few miscellaneous blockage as well. Like, first of all, composition tax. You cannot claim ITC of composition tax. I have already told you that the composition dealer cannot pass on the ITC to the next person. He cannot charge tax from the next person. So the composition tax is not eligible for credit. If the goods are not used, it is lost, destroyed, write off before use, you cannot claim the credit. You cannot claim the credit on free gifts and samples. I have already told you in the supply chapter that if this is not a supply, then you cannot claim credit. So free gift and free samples are not a supply as per section 7. So if it is not a supply, you cannot claim credit of that as well. So free gifts, free samples, it is not a supply, you cannot claim the credit of that free gifts and free samples. One more is very important. You have paid the tax under demand. You evaded the tax and then the department demanded you tax later under section 73, 74, 129, 130. Department is not fool. They are recovering a tax from you and now you are saying that I want to claim the ITC of that tax because I have paid the tax. So I can claim. No, yaar. You cannot claim the ITC because you were involved in a tax evasion and you paid tax under demand. So tax paid under demand cannot be claimed as ITC. So I was bringing the goods without invoice. My vehicle got caught. They imposed a demand. Now you are asking, give us the credit of the demand. Then what was the purpose of then what was the purpose of demand? If they give you the ITC of that demand, then what is the purpose of the recovering tax? So they will not give you the ITC of the tax paid under section 73, 74, 129, 130. And at last, NRTP cannot claim ITC in India because they are coming from abroad. So they cannot claim any ITC in India. They can claim ITC only of the goods which they are bringing with them. So when they are bringing goods, they are importing goods. So the IGST paid on the import, only on that case they can claim ITC, but they cannot claim any other ITC other than goods imported by them. So non-resident taxpayer, they are coming from abroad to India, they cannot claim ITC in India. Now, last and final, last but not the least of this ITC topic is section 17, other than 17.5. There are some topics which talks about the proportionate ITC. What is the case? Listen carefully. What is the purpose of the government to give us the ITC is, the main purpose was that if I am paying the tax later, I should get an ITC for the purchase. So I have a tagline for this. What is the tagline? It's a tagline in Hindi. जिसके दरवाजे पे है टैक्स का चौकीदार वही है क्रेडिट लेने का हकदार. So जिसके दरवाजे पे है टैक्स का चौकीदार means if the person is liable to pay tax, he can claim credit. If the person is not liable to pay tax, he cannot claim any credit. So now the point is, if a person is having dual turnover, his turnover, some turnover is taxable and his some turnover is exempt. Now whether he can claim credit or not, the answer is very simple. He can claim proportionate credit. It means if he is having 60% taxable turnover and 40% exempt turnover, his credit will also be distributed in 60 and 40%. He can claim 60% ITC and he has to reverse 40% ITC because that ITC belongs to the exempt supplier. So he can claim ITC only on the supply which is taxable. So if he is having any common material, he is having any common machine which he is using for taxable turnover as well as exempt turnover, he can claim ITC only proportionate ITC on the taxable turnover. So his 70% turnover is taxable, his 30% turnover is exempt. So what he has to do is, he has to reverse the 30% ITC. He has to reverse the 30% ITC. Yeah, that is very important regarding proportionate ITC. But one more important thing. It is for the exporters. Listen very carefully. My question is from all of you guys. Whether GST is leviable on export or not. Whether GST is leviable on export or not. Is export, we have to pay the GST, or it is, we don't have to pay GST on export? Actually, export is treated as zero rated supply. Yeah. So if I am supplying goods outside India, or if I am supplying goods to SEZ, I am an exporter, I don't have to pay any GST. It will be treated as zero rated supply. Okay. But the point arises is, can exporter claim the credit? Can exporter claim credit or no? Yes or no? Even if he is not liable to pay tax, can he claim the credit? Yes, he can claim the credit. And interesting, the credit which is unutilized in his hand, because he is not going to pay any tax. So what about his credit? How can he utilize his credit? If he has any credit and he is an exporter, he cannot use that credit. He can claim for refund under section 54. Yeah, he can claim refund under section 54. And from here, tomorrow we will be discussing about the refund provisions. Under section 54, we will be discussing what are the cases of refund, inverted duty structure, exports, and there are so many cases where a person can claim refund. So tomorrow, sharp 6 p.m., we will be meeting where we will be discussing the refund topic. We will be discussing the audit, and we will be discussing the anti-profiteering clause. That will take around 45 minutes to 50 minutes. I will cover the GST portion, and after that I will start with the custom portion where I will be discussing classification of goods. One good news for all of you guys, classification of goods for GST and classification of goods for customs is exactly same, because both law follows the same tariff. So the classification rules for GST and customs are not different. They are exactly same. So tomorrow we will be discussing classification as well. We will be discussing custom law, import, export, drawback, all the topics in the 3 hours. So tomorrow we are having a session from 6 to 9 p.m. And if you like this session, just give me a feedback. I am also open for critics. So if you don't like anything, you can share with me that as well. If you like the session, just give me the feedback. It motivates me a lot. Okay. So thank you. Thank you. Thank you. Thank you so much. Thank you everyone for constantly listening for 7 hours. When I decided ना, when जब बात चल रही थी कि 7 घंटे का सेशन लेना है, तो I was like कि कौन अटेंड करेगा और कितने बच्चे अटेंड करेंगे. But interesting thing is, from morning the counting was around 80, 85 or 90. Till now the counting was 80, 85 and 90. So from the morning till after 7 hours, the participants are here. So I appreciate your consistency, your patience, and thank you so much for listening patiently. I have already shared the notes. I will share the custom notes tomorrow. Actually, I don't have the link right now. I have already uploaded, but link is not right now with me. Tomorrow, in the beginning, I will share the custom notes as well. Okay. So thank you so much. If you have any query, you can ask me. I have already shared my. Yeah. Thank you. I have already shared the number, my phone number. So if you don't have the phone number, I will be sharing in the chat box. So it's 9406858626. Thank you. Enjoy. Good day. Bye bye. You have any query, you can WhatsApp me. Thank you. Good day. Good day. Thank you. Thank you, everyone.